Greetings to all the CA students. My name is Natasha and I am a direct tax tutor. This video is mainly for the CA Inter students. So today we are going to see the basics of tax which you need to know as a CA Inter student before you learn further about the subject. Now, there may be many who have heard the word tax but really don't understand the meaning. And there may be many others who might not even have heard of this word tax. So let's begin. Let's understand first what is tax. Tax is the fee charged by the government. So every government charges some fee from the citizens, from the residents as tax. Okay. Why do we pay tax? Why does the government charge such fee? Why do we have to pay such tax? So that the government can provide us with the required amenities and public services like the street lights, roads. These are all the basic amenities and services that we need in our day-to-day life. We ourselves are not going to go and set up the street lights. We ourselves are not going to go and make the roads. So, from the tax that the government collects from us, it is able to provide us such services. So, who is authorized to collect tax? The Constitution of India has authorized the government to collect taxes. So, you and I cannot go and collect taxes from people, right? The Constitution of India, Article 246 of the Constitution of India, and 7 schedule to Article 246. It has three lists: the union list, the state list, and the concurrent list. The state list is where the state government has the power to make the rules, the laws. The concurrent list is when both the central and the state government have the power to make the rules and laws. The union list is where the central government has the powers to make laws. Under that, entry 82 says power to make laws on taxes of income other than agricultural income is under the union list, which means the central government is going to make the laws on taxing our income. However, not agricultural income, because agricultural income is taxed by the state government. So, in the Constitution of India, under Article 246, under the 7th schedule, under the union list, the central government has the powers to make laws on taxes of our income. Now, it would be very interesting to know that we pay taxes not only on our income, but also on our expenditure. So, for example, if you buy a car, you are going to be paying GST. The vendor is going to collect GST from you. What is GST? It is goods and service tax. Means it is the expenditure. The goods and services is something you expense on to receive that. And on that, the government has the right to collect tax, right? So looking at it, I would say tax is you pay on your income as well as on your expenditure. That you pay on your income is direct tax. It is governed by the Income Tax Act 1961. And for the CA Inter students, it has 60 marks of weightage. Then tax that you pay on your expenditure that is collected from you by the vendor is called as indirect tax. It is now governed by Goods and Service Tax 2017, and it has a weightage of 40 marks in your CA Inter tax paper. Earlier, before the Goods and Service Tax Act was introduced, there was Service Tax and Customs Act. But now all of that has now come under Goods and Service Tax Act, and it is, so your indirect taxes is governed by the Goods and Service Tax Act, and your direct taxes are governed by the Income Tax Act 1961. So basically, direct tax is levied directly on the wealth of the person, the income of the person. The burden cannot be shifted. Whereas in case of indirect tax, the tax is levied on the price of the goods and services, and the person paying the tax passes on the incidence to the other person, right? So you are paying the tax, but on your behalf, the vendor is going to now deposit that tax with the government. And in our day to day lives, if you look at your expenditure bills, you are paying GST on almost any expenditure that you income. It may be as small as buying an ice cream from the natural ice cream shop, or it could be as big as buying a car. So you are basically paying GST on all the small and big expenditure that you are incurring on your day-to-day life. Whereas direct tax, income tax is paid on your income only. Now, the Income Tax Act 1961 extends to the whole of India. It came into force on 1st April 1962, and it has 298 sections and 14 schedules. Now, these are some small details, however, very important details that you need to know because of the MCQ type of questions that are now introduced in your tax paper. So these are small details, but these are very important details for your examination as well as for your knowledge. You should know when the Income Tax Act came into force. You should know how many sections are there. So there are 298 sections and 14 schedules. For the CA Inter students, as of now, around 99 sections are something that are important to you, not the whole 298 sections. Now, the income tax law consists of the Income Tax Act, the Annual Finance Act, the income tax rules, circulars, notifications, and legal decisions of courts. So, in brief, Income Tax Act is the Income Tax Act 1962. Now, this act is not as it was formed in 1962. Every year there has been changes that have been taking place. So every year the budget takes place. Now it takes place on 1st of February every year. Earlier it was 28th of February every year. So every year the budget is presented by the Finance Minister of India, and there are some amendments to sections made. There are some clarifications given, and amendments are generally relating to the rates of taxes, or if there may be some addition provisions that need to be made. All of this is covered in the budget. So once the Finance Minister of India introduces the finance bill in the parliament, it is then passed by the Lok Sabha and Rajya Sabha, and then it receives the President's assent and becomes the Finance Act. And then such changes and such clarifications, such amendments are incorporated in the Income Tax Act. Income tax rules are basically some form or some rules to the sections. So everything was is not given in the section. The section explains a particular provision. Whatever further minor details are required, they are given in the income tax rules. Again, the circulars and notifications help with better dealing with the sections, the rules. And then finally, there are legal decisions of the court that help us understand the sections better, that gives us a clarity on the sections better. Now, This was the very basic understanding of tax and how it is in India and how it is important for the CA inter students. Moving on, I shall start with the definitions and the subject. So, definition 1 of the Income Tax Act 1962 is on applicability. So basically, you open any act, the first section is always applicability. Applicability means to whom all is this act applicable. The Income Tax Act 1962 is applicable to the whole of India, including Jammu and Kashmir. Now, section 2 is definitions. Definition means the various terms that are used in the act. Okay, so you open any act. Section 2 is always definitions. Likewise, in the Income Tax Act also, section 2 is definitions. Definition means whatever high-fundu words are used in the act, the meaning of the same is given to you in section 2. So, for better understanding of the subject, important words are defined in section 2, right? So, further moving on, when you go on to read the other sections, if you don't understand the meaning of any word in those sections, where are you supposed to check? You are supposed to check under section 2. Section 3 of the Income Tax Act is definition of previous year. We shall discuss this separately. Now, section 4 is the backbone of the act. It is charge of income tax. This is the main section. It is because of this section that our income is chargeable to tax. It forms the base of this act. So, what does this section say? It says income tax is payable by every person on his total income earned in the previous year at the rate applicable for the relevant assessment year. Now, the words that are in bold is something that we are going to see now in detail. So, the important words here are person, total income, previous year, rates applicable, and assessment year. We shall look at each and every word carefully and we shall understand the meaning and importance of the same for the Income Tax Act. Now, there are two types of definitions in the Income Tax Act, inclusive and exclusive. Let's understand these two types so that it would help us understand the definitions as well. Okay, so inclusive definitions always start with the word includes, which means that whatever is written under that definition, that is obviously covered in the definition. However, any other item of similar nature will also be covered in that definition itself. So basically, such definitions are illustrative and would also include something that is not specifically mentioned in that section. However, it is of similar nature. Such definitions are called inclusive kind of definitions. I shall give you the examples as I move on. Then the second type of definitions are exhaustive definitions, which are self-explanatory and restrictive in nature, meaning whatever is written under that section, however the section is defined, that is final. You need not try to fit in any other meaning to exclusive definitions. So whatever is written is final. Okay. So these are the two kinds of definitions. Person is defined under section 231 of the Income Tax Act. A person includes an individual, HUF, firm, company, AOP, BOI, local authority, and every artificial juridical person. Now, as soon as you hear or see or read the word includes, it should strike you that this is an inclusive definition. The definition of person in the Income Tax Act is an inclusive definition. Now, individual means any natural person or human being. It means you and me. HUF is Hindu Undivided Family. It means the head of the family. The most senior member of the family is the Karta. Membership in the HUF is by way of birth or marriage. So any child, girl or boy, born in the family automatically becomes the member of the HUF. Also, the wives or daughter-in-laws automatically become members of the HUF. Firm means partnership firm. There are two types of partnership firms: unlimited liability partnership and limited liability partnership. Unlimited liability partnership is governed by the Indian Partnership Act 1932, wherein the liability of the partners is unlimited, meaning their personal assets can be utilized if needed. And limited liability partnership is governed by the Limited Liability Act 2008, wherein the liability of the partners is limited up to the capital invested, meaning their personal assets cannot be utilized. Company can be a public company, an Indian company, or a foreign company. For income tax purposes, company is two types: domestic or Indian and foreign company. A domestic company is a company incorporated in India and following all the requirements as per the Companies Act 2013, like declaring dividends, filing the annual returns, conducting AGM, etc. Whereas foreign company means a company which is not a domestic company, meaning that is not incorporated and in India, and the Companies Act 2013 is not applicable to it. AOP means association of persons. BOI means body of individuals. So, when two or more people come together for a common purpose and earn income, it is an AOP or BOI. Now, AOP would be when two or more people and so AOP would be where two or more people from the categories of person. So here you can see 7 categories of persons. So when two or more people from this category of persons come together, it is association of persons. Whereas in case of BOI, two or more individuals, when they come together, that is known as a BOI, body of individuals. Now, let me give you an example for this. Suppose there are 3 complexes in an area built by 3 different builders. They are all unable to sell their flats because these complexes are very far away from the railway station or the bus stop. So, these 3 builders come together and start a bus facility from the station to the complex and back from the complex to the station, running all throughout the day. So now this is when these 3 builders came together. Now it may so happen that one of the builders may be a proprietary and the other builders may be a firm and the third builder may be a company. So when these 3 come together, it is association of person. However, it could also be that all the 3 builders are like propriety and operate in their individual names. So then it would be that association would be a body of individuals. Now, local authority would mean the local corporation, the municipal corporation in the area, the BMC, even that is covered under the definition of person. And every other artificial juridical person means any other person who is not covered in the above categories. Now, as we discussed earlier, the definition of person is an inclusive definition, means it will also cover other than those items that are already mentioned above if it is of similar nature. For example, temple or a religious institution is not covered in any other category. So it is covered under every artificial juridical person. As we all know, there are huge donations and money in cash kind received by the religious institutions. So, as the temple or religious institution is not defined under any of the other categories, it would be included under the category of artificial juridical person. Moving on, income is defined under section 224 of the Income Tax Act. The definition of income is important as tax is payable on income. So we should know what is income. The definition of income is again an inclusive definition, means it includes the items mentioned in this section and also any other item to which natural meaning of the word would apply. So, income includes income from salaries, income from house property, profits or gains from business or profession, capital gains, and income from other sources. So, income means all these items and any other inflow in the nature of income. So, would all inflows be income? So, for example, if I am asked to take an outstation lecture, I book my flight tickets and take a lecture at the outstation location, have lunch, and come back. I would give two bills to my student, one for my fees to take the lecture and one for the expenses incurred by me. The payment I get for my fees is my income, but the payment I receive against expenses incurred is known as reimbursement. So, reimbursement, as you can see, is an inflow for me, but it is not an income for me. Okay, so moving on. What is salaries? Now, all of these head of incomes are actually a complete chapter in your portion and are dealt with in depth. However, I will only give a brief description here for your understanding. So, what is income from salaries? Income from salaries would be where an employer and employee relationship is formed between the two. Okay, so like I said, that I went for an outstation lecture to a student. Okay, now in that case, my student is not my employer and I am not the employee of my student. There, I am a professional and I have given my services. Okay, and such services are not salary. Salary would be where there is a setup or a contract or a appointment letter to say that the relationship between you and the organization is of an employer and employee. Income earned from such contract would be income from salaries. Then income from house property. For now, you may just know that income from house property would be rental income. Then profits or gains from business or profession. Business is defined under section 213 and includes any trade, commerce or manufacturing or any adventure or concern in the nature of trade, commerce, or manufacture. Here I have just read out the definition for you. Trade would mean like that of a grocery shop person. He buys goods and sells it at MRP. He is a trader. So you would say, ma'am, doesn't he earn any profits? Well, there is always a huge margin between the production and cost and MRP for the middlemen to make profits. So the grocery shop guy doesn't buy the goods at MRP. He may be buying it at a lower price, but he sells it to you at MRP, and that kind of business is a trade. Manufacturing is when we are converting raw materials into finished goods, and commerce would mean business of providing services. And yes, in brief, yes. Okay. Capital gain arises on the sale of your assets. Assets could mean building, furniture, investments, vehicles, etc. We would look at this in depth in the specific chapter. Income from other sources would be something which is not covered under any of the above heads. Like, I repeat again that the definition of income is an inclusive definition. Hence, whatever is not covered under any of the other heads would be covered under income from other sources. For example, dividend, interest, etc. Now, this is how the computation of total income is made. You have income from salaries, income from house property, capital gain, other sources. You have a gross total income. Deduction under chapter 6A is something that is deducted, and the rest is your net total income. Okay. Now, moving on. Previous year is defined under section 3 of the Act. Okay. Now, for other people, it is calendar year, it is new year. For chartered accountants, it is previous year and assessment year. Okay. So we would look at previous year and assessment year together. Assessment year is defined under section 2.9. Now, previous year is defined as the financial year immediately preceding the relevant assessment year. Okay. So previous year is the financial year in which you earned the income. Like, for example, from 1st April 2020 to 31st March 2021 is your previous year. Okay. So, the financial year in which the income is earned. So, the financial year is 2020 to 2021. This is known as the previous year. Such income will be taxed in the immediately succeeding financial year, which is known as the assessment year. Assessment year is defined as a period of 12 months starting from 1st April. So for income earned in the previous year 2020 to 2021, the income will be taxed in the assessment year 2021 to 2022. Okay. Now, a previous year can be less than 12 months. So suppose if a business is set up on 1st March 2021, the previous year will be 1st March 2021 to 31st March 2021. However, the assessment year for this period would be 1st April 2020 to 31st March 2021. I hope you've understood that what I'm trying to say here is that in this particular example, the previous year was only the month of March, but the assessment year is where you would be offering your income to tax. That is always 2021 to 2022. Okay. Now, moving on, Section 27 of the Act defines an SEC. An SEC is defined as any person by whom any tax or any other sum is payable under this Act. Means an SEC can be foreign, an Indian, foreign, or a company or an individual, any category of person who has earned income and is required to pay tax. Okay. Now, other sum would mean penalty or interest. Okay. Now, how does penalty and interest attract? So suppose you have paid tax less than what you were supposed to pay, or you paid the same after the due date, then you have to pay penalty or interest. So any person by whom any tax or any other sum is payable under this Act, such person is known as an SEC. Now, it is also important to know the definition of India, which is defined under Section 225A. Now, you would say, ma'am, we know what is India. India means from Kashmir to Kanyakumari. Oh, yes, my friends, that is the map of India. But as per Article 1 of the Constitution of India, India is a union of states and territories. Its territorial waters, economic zone, the seabed and subsoil underlying the territorial waters, the airspace above its territory and territorial waters up to 12 nautical miles. You should know the definition of India as per the Income Tax Act. Now, this is how a normal computation of total income and computation of tax liability looks at. So just quickly, you first calculate your income from different sources and arrive to the gross total income. And then deduction under Chapter 6A is reduced from the gross total income, and that is how you arrive at your net total income. Then computation for tax liability, basic tax at an X rate, which we are going to just look in the next slide. Surcharge is added to the basic tax, and education cess is added to basic tax plus surcharge. This you arrive at your total tax liability. You reduce the taxes paid and the TDS and advance tax, and that is how you arrive at your net tax liability table. This is a chart of your rates of taxes. Rates of tax is different for each category of person. Okay, for an individual, HUF, AOP, BOI, AJP, that is artificial juridical person, there is one kind of rates. Then there is for firm and local authority, and then for a company. Now, let's just look at the individual column. It says basic tax is as per the slab, and the slab is this for an individual HUF, AOP, BOI. So it is exempt up to 2,50,000 rupees. 2,50,000 to 5 lakh is 5%. 5 lakh to 10 lakh is 20%, and more than 10 lakh is 30%. Okay. If it is an individual resident, senior citizen, which is if the person's age or the individual's age is more than 60 but less than 80, such income of the individual is exempt up to rupees 3 lakh. From 3 to 5 lakh, it is taxable at 5%. From 5 to 10 lakh, it is taxable at 20%. And more than 10 lakh is taxable at 30%. For an individual resident, super senior citizen, which is an individual whose age is more than 80, 5 lakh income is exempt. So 5 to 10 lakh is taxable at 20% and more than 10 lakh is taxable at 30%. Here you should bear in mind that the senior citizen tax rate is obviously applicable only for the individual and not for the HUF or AOP or BOI. Okay. Then the Income Tax Act has given some relief to the individual taxpayers under Section 87A. If the total income of the individual is less than or equal to 5 lakh, the deduction from basic tax is 12,500 or the actual tax payable, whichever is lower. Okay. So basically, you can say that no tax would be payable if income is up to 5 lakh. Because if the income is less than 5 lakh, then the tax calculated would be less than 12,500 and that would be given as a deduction to the individual as per section 87A. Now, coming back to rates of taxes, I would just give you a moment to read through and I shall read with you. So for the individual, we've already looked at the slab. Then there is surcharge, wherein where the total income is more than 50 lakh but less than 1 crore, it is 10% of basic tax. Where the total income is more than 1 crore and less than 2 crore, it is 15%. More than 2 crore and less than 5 crore is 25%. And more than 5 crore is 37%. Health and education cess is 4% across all the categories of person. For a firm and local authority, the basic tax is 30%. Surcharge, if more than 1 crore rupees, is 12% of basic tax. For a company, which is a domestic company, the basic tax is 30%. The surcharge, if total income is more than 1 crore but less than 10 crore, it is 7%. And if total income is more than 10 crore, it is 12%. For a foreign company, the basic tax is 40%. Where the total income is more than 1 crore but less than 10 crore, the surcharge is 2%. And if the total income is more than 10 crore, the surcharge is 5%. Now, under section 115 BAC, this is a newly introduced section and is applicable from this assessment year 2021 to 2022, wherein the individuals and HUFs have an option to pay the tax under section 115 BAC, provided they do not avail of certain exemptions and deductions. So just briefly looking at this, what you are required is to do is that whatever is your total income, without considering certain, or I would say majority of the exemptions and deductions, you will be allowed to consider this option for computing your tax liability. So where the income is up to 2,50,000, the tax is nil. 250 to 5 lakh, it is 5%. 5 lakh to 7.5 lakh, it is 10%. 7.5 to 10 lakh, it is 15%. 10 lakh to 12.5 lakh, 20%. 12.5 to 15 is 25%. And above 15 lakh, it is 30%. So if you just carefully observe, for every increase of 2,50,000, there is an increase of 5% of tax. I think this was the easiest way to remember this option and it is applicable for all. Okay. Now, so that was the basics of tax. And thank you all for a very patient hearing. For in case you need the notes for this chapter or you need the PPT, you can get in touch with me. I am also a personal direct tax tutor, and this is my information. Thank you very much.